All right. Yeah! Yo, yo, yo. What's going on? Nothing's right, I'm torn. All right, good morning. Comment allez-vous? How are you? Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money, cannot afford to lose. My name is Wayne McDonald. I'm a trader just like you. I like currencies, I like commodities, I like indices. Hey, even bonds, yo. Even bonds. Sure. I even like derivatives. Cool. So if you got questions about all these things, or maybe it's something simple like, I don't know, trader psychology. Like that's the easy part, right? Anyways, if you got questions, I've probably run into the brick wall more times than you, and I can share the least bloody strategy. Let me know how I can help. Cool. So today I suggest we get caught up with what's going on in the world. This week is an interesting week because we have, I think, 30% of the S&P 500 companies reporting. We also have a Fed meeting. We also have an ECB meeting. We even have a BOJ meeting. And there's news, and you're like, oh my God, that's enough. So it's going to be a complex week. Very complex week. So thank you for being a subscriber. I'll be here every day. Okay. So I hope to see you. Also, do you want to do some sort of get-together for the Fed meeting? I might not actually be able to do it now, thinking about it. I have a family obligation. That's right. I forgot about that. It's on Wednesday. Oh, these things are so hard to take. So hard to keep track of. That's right. No, I'm not going to be able to do it. But what I need to do family-wise is important. So, unfortunate timing. But anyways, yeah, I won't be able to do that. So I apologize. You're on your own, bro. That's why I train you to be an independent trader. I want you to be able to think for yourself. I don't want you to watch Bloomberg or CNBC to get opinions. Maybe to compare and contrast with your own opinion. That's what I want. I want you to be independent, man. So ask questions, get involved, and I will help the best I possibly can. If you look in the description below the video, there are a link to resources that are super awesome, amazing, makes the world and life yummy. There's a link to my book, Strategic and Tactical Forex Trading. Please leave a review. There's a link to investorbootcamp.com. So if you want to learn how to trade gold and oil and Bitcoin and real estate and do personal finance or commodities or currencies, so on and so forth. How about real estate? Yeah, some of those, or most of those topics are available, but in the future, like personal finance and real estate, I will cover soon. Great. So we'll get all that taken care of. I'd also like you to visit tradersway.com. You need a broker. I like them. What can I say? I like them. I think they're trustworthy. I think they're ethical. I think they provide a competitive service. I think you should try them. I think you should check them out. I think you should go and open up a demo account, do your own due diligence. And if they earn your loyalty and respect like they earned mine, maybe you'll choose them to execute the trades for your successful Forex trading business. Let's move over to the charts. All right, so I guess no, I don't want to start here. Let us, first of all, let's move that. Cool. Oh, Sky Killer, Coach, would it be possible for you to take a look at PMI releases from EU to see how you do it? I don't, they're not my prime focus, Sky Killer. So what's my prime focus? When it comes to fundamental analysis, why do I even care about news? Richard says PMI goes into GDP. Not really. Consumption, investment, government spending, it's not really PMI. Because they're pretty negative. So what? Why do I care? Again, answer that question. Why do I care? Why should I care about any of this? They say death of new orders. Okay. Okay, great. So why do I care? What's the whole point of tracking any of this news stuff? First of all, I don't care about news. News just creates volatility. I don't even like volatility. So why do we do fundamental analysis? Because we are trying to understand the current or future monetary policy of the central bank. Not to front run the market. I'm not trying to front run the market. I'm not trying to beat the market. I'm not trying to outsmart the market. I'm trying to understand the market, and I want to trade with the market, Tim. I'm a trend trader. I'm not trying to front run it. Really, I'm trying to ride it. I'm a cork in the river of Forex. I want to float downstream. I want the easy money. I want the path of least resistance. But PMI is a good indicator of the future. According to whom? Okay? So anyways, no. No, I know, Coach. I know I'm not beating you down, Sky Killer. I'm trying to make the point. Okay, I'm trying to make the point. What I care about is what the ECB is going to do. Do I care about the PMI? Not necessarily. Is it good information that goes into maybe some of your analysis? Yeah, but if you already have a sense of what the ECB is going to do, like they've told you, like, I don't know. How about this? Let's do this. I'm going to show you QuantBox. I didn't even mention it at the top, but let's do QuantBox. Let me log in. Oh, I gotta, oh, this is going to get complicated. No, I gotta switch this. I'm in the wrong browser session. Got to get onto the Google Cloud. There we go. Okay. So what we care about, is this. We can go to, I've been messing around. It's funny, I've been messing around with things. I kind of made a goof of it. I'll have to fix that. All right, here's what we care about. And you can make your own analysis or you can follow the central bank. The thing is, you want to do both. So when you're talking about European PMIs, you're tracking that data to figure out what the ECB is going to do in the future. This is what the ECB is going to do in the future. So we already have this information. So the more important thing, and you might argue this is why you're interested in PMI, but the ECB is going to raise interest rates and they're not going to cut interest rates. So we already know that. And what you're trying to figure out in the future, and this is interest rates in the Eurozone going out to 2025. And you would look at this and say there's no rate cuts and probably rate hikes. Where in the United States, there's probably some rate hikes and then some cuts. In New Zealand, there's a hike, a pause, and then lots of cuts. And that determines these values, right? Whether you should be a buyer or a seller. So your PMI stuff might be important, and maybe it helps you have confidence of sort of the economic activity around that asset, in this case, the euro. But it's like, I don't know how much relevance it needs. Like, is the PMI so bad that the central bank is going to change the outlook they've already given us? And when you look at it, the answer is no, probably not. Like, if you look at the change over the last 2 or 3 or 4 months, is it going to change the way the central bank looks at its own economy? Where they're like, oh, snap, forget it. And the answer to that is probably not, right, Sky Killer? So therefore, it's really irrelevant. What we're looking at is data that will change. So is it PMI? PMI might predict whether the Eurozone is in recession, is going to go into recession, or is falling quickly into recession, so quickly into recession that it's destroying inflation. Is that what it's showing, Sky Killer? That the Eurozone is in recession, and not just tiptoeing into it, but crashing into recession so quickly and so devastatingly so that it's tearing apart inflation. We're going and taking it into disinflation and then deflation. And you're like, no. So then what do we care about? Inflation. So let me go back. Did I kill it? Did I kill it? I might have killed. Oh, no, I didn't kill it. Let me bring it up. So what you do is you go to Eurozone and say there's interest rates going out to 2025 in the Eurozone and inflation levels going into the Eurozone. And right now, it's expected to continue fall and then stabilize. So should the ECB cut interest rates? No. The ECB, Eurozone area, we're looking at, 5% inflation levels. Should they change their policy? Not yet. And so, then you would, if you were worried, let's say by next year, the ECB tells us they're going to be at 3.5% inflation. Is that true? Well, that's what they're telling us. They're telling us that's what their models suggest. So really, if you're going to look at PMI, you're looking at it very esoterically of how accurate are the ECB's projections. Are we really going to be at 3.5? Or are we really going to be at 4.5? Okay, you see, you might not be looking at it the right way. Well, and if that's on trend of the ECB actually not cutting interest rates, but maybe slightly rising, then that's what we really care about. And you probably get better snapshots other places, but look, if you're looking at, I mean, I don't know. So there you go. I'll just leave it at that. Right? So does it reinforce your opinion and stuff like that? Yeah, cool. But you shouldn't need it either. But sure, you can look at it. But I feel like a lot of traders, investors look at everything, treat everything with the same level of importance, and then get confused. Because very often you're going to get conflicting data, right? So what you need to do is kind of filter out and almost look at it as a basket. Like, is there so much bad data in the Eurozone that you believe inflation levels are going to drop below 3.5%? Which is what the ECB is already telling us, which I find doubtful. I might argue that in the first quarter, the Eurozone will still be at 4% or even higher. But if you're like, dude, look at this PMI, we're going to drop down to like 2.8%. Oh my God. Well, then the ECB might have to cut interest rates. But that's not what it smells like to me. Okay? Yeah, and there you go. So Sky Killer, I'd rather you look at that and say, and this comes right from my third quarter outlook, where I'm like, look, a lot of these central banks say inflation's going to come down. And why do they say it? Well, they say it because inflation has been coming down. Then I say, like, so this is my counter argument to the argument. Why did inflation fall? Is it because the central banks raised interest rates? Or is it because commodity prices have collapsed? Well, I'd say, well, commodity prices have collapsed. The thing is collapsed to the point where they can't fall anymore and they're more likely to go up. Well, then if they're more likely to go up, and right now, as you know, oil's been up for a month. So what's going to happen to future inflation? Continue to fall? No, probably not. So then if inflation is more likely to go up than down, then the central banks are more likely to raise interest rates. So I'd say forget your PMI, watch oil, watch gold, watch grains, watch food. Headline inflation might go back up. And that might be so much more important, you see? Why is CAD weak? Okay, well, you might want to look at this. Okay? By the way, guys, look, you're asking good questions, but I've already answered all of this. All you have to do is pay money. I know it sounds facetious, but it's already here. I mean, look, dude, seriously. Why is CAD weak? Because they're expected to cut interest rates faster than most central banks next year. Like, you should know this. Right? You should know this. It's already been printed, done. It's like these are factual things. So you would have to either subscribe to QuantBox Pro or go to all the central banks, download all their economic outlooks, create a spreadsheet, and organize them for projected rate hikes and projected rate cuts, and then graph it. And you could do it for free. And Jason says, maybe some weakness to come from recent Nova Scotia floods. Jason, you have to ask yourself, does the entire world dictate its import and export supply chain and global cash flow around the water tables of Nova Scotia? So like China says, well, forget forget buying iron ore from Australia or forget buying crude oil from Alberta because of floods in Nova Scotia? And the answer is like, no. So it might be an environmental disaster. It might be a humanitarian disaster. But what you and I and what we, when we talk about Forex, is global money flow. And would that disaster change meaningfully global money flow? No. Okay? So we always have to like put that into perspective, right? What we do is track money crossing a border. That's what we care about, Jason. So there's all kinds of good and bad things happening around the world. And in particular, there's a lot of news. Oh my God, China is going to attack Taiwan. What should we do? Right? Oh, the dollar's going to be worthless one day. You know, these big things. Everyone's going to use cryptocurrencies, so we should stop, right? Like, those are very big questions, and they're very serious questions with very serious outcomes. But the thing is, what we have to track is, are these things so big and so powerful, it will stop the normal process of money and business activity around the world? Is it so big that that China would stop buying iron ore and coal from Australia? The answer, of course, is no. So when we talked about China and Japan getting at it, 5 or 10 years ago regarding an island in southern Japan. And, the Chinese had destroyers out there and the Japanese were flying airplanes around. And we're like, oh, no, this is going to be like the beginning of a global war. I said, well, that might be true, and I really hope not. But what we're trying to track is what needs to happen in that geopolitical risk for someone that has, let's say, $5 billion invested in a portfolio. What needs to happen that is so unbelievably scary that they dump their $5 billion portfolio that they spent 5 to 10 to 15 years building, that they say, oh my God, everything just changed. Sell everything. Is it finger pointing between these two? No. Is it rhetoric? No. Is it what CNN is reporting or Fox News? No. Is it missiles in the air? Yes. Okay? You see what I mean? So, so this is like a similar comment. Jason mentioned floods in Nova Scotia. Are they important? Yes. Are they important globally? No. Are European PMIs economically important? Yes. Are they fundamentally important? No. So we got, right, they're economic reports. The trend is also important, but is it enough to change the central bank? No. Now, they might be one day, but everything comes back down to this one idea, and this is why I hit it hard. Our European PMI data that came out, is it so important that a $1 billion portfolio will be liquidated? No, probably not. So what is happening? Why, let's go here. I'll show the euro for today. Okay? Why is euro so weak? Is it news today? Yeah, certainly, for sure. Sure. Is it because the dollar is strong? Oh, yeah. Yeah, even almost more so. And is any of this predictable? Well, yeah, it's actually seasonal. It's seasonal. It's seasonal. Yen is strong, dollar is strong, Swissy is strong. It's seasonal. It's not unusual for this time of year. Okay? You're like, seasonal? Yeah. Have you studied the seasonality of the US dollar this time of year? For example, Kiwi dollar almost always falls this time of year. Aussie dollar almost always falls this time of year. Did you know that? Okay, euro dollar almost always falls this time of year. Now, do we know if it's going to happen this year? No. But should we be aware that it typically happens around now? Yeah. And could you have that ready and steady set up for euro dollar falling? Yeah. Okay, great. And so how should you treat this space of the projected high for the month of July, knowing that this time of year it almost always has fallen over the last 20 years and over the last 5 years? Is that PMI data? Well, partially. But is it just right as rain? Yeah, at least partially. Okay? Now you might disregard all of that and say, well, yeah, but on the long run, the S&P 500 is going to rally and because the United States is not going to go into a recession, and therefore the US dollar will weaken, and euro is the anti-dollar even more so than gold, and so therefore this is likely to happen in the future. If that's your narrative, I totally agree with you. I don't know if you're right, but if you had a narrative like that, oh my God, then you're totally right. But if you're going to do the seasonal narrative, well, then this is high enough, and then you have your short. Where I worry about newer traders is that European PMI comes out, euro dollar drops, and now you want to do something about it. Which means you probably missed this up. Oops. You probably missed this up. And you probably missed this down, and you would probably miss this up. Now, as traders and investors, none of us know what is going to happen. But you should know before the PMI comes out what you intend to do. And be ready and willing and able to do it, okay, before the data. So, are you a buyer of euro? You shouldn't walk into the market now and say, okay, PMIs have come out in such a way that the euro is going to fall or falls. So now you want to sell it, but you can't sell it now. What do you mean? You're going to, right? Like, I want to make this point. So I'm going to push on you emotionally, and I'm not talking to anybody in general, but I'll push on all of us emotionally here. So European PMI comes out and the euro falls, and now you want to sell it? You want to sell it at support. That's a terrible idea. That's a dumb idea. You see, like you're way late. So if anything, you should be, let's say if you had been a bull, right down here in early July, and then you expected some sort of exodus, and now you're interested in re-entering, then you would look left, look at the role reversal, you'd look at the August support pivots, and you say, I don't know the future more than anybody else, but I'm still risk on based on my analysis of things like the VIX, like gold, like the yield on the Japanese government bond, like what you expect the S&P 500 to do. And based on your analysis, you're thinking long and strong off of this number. Meanwhile, amateurs are just starting to sell after the fact. And we all know that those are not big profitable trades, right? Would you guys agree? Now that it's come out, now that the euro's weak, there's not a lot of alpha for you. In fact, you have no alpha if you're just reacting to like what I would think is mediocrity as far as the importance of economic data. What do we actually care about? The ECB is going to likely continue to jack up interest rates. And if you think that's important, then you might be interested in buying this. And if not this, because you're right, then what about something else? What about yen? Or what about a cross? What about being bullish on euro and bearish on pound? Because you're doing comparative analysis of these economies. And all of a sudden you're on a way higher wavelength. And that's where I'm trying to get you to go. PMI came out, euro dropped, so what? Were you on it yesterday? Were you on it last week? No. Well, then it's irrelevant. Okay? If you shorted it last week, now you got paid, you're probably going to take profit now and sell it to an amateur that hasn't done any research and is just going to react to the down. Well, smart money is going to exit the down because they were in it a week ago. So the big question is, what do you intend to do the rest of the week? Are you a buyer of the euro? You see, like this is how I want you to think. What is the ECB going to do this week? Are they going to tell you inflation is over and they're going to hit their target at 3.5 next year and then 3.2? They're going to tell you everything's working out just tickety-boo? This is what I want you to be thinking about over the weekend, but certainly by Monday, I want you to think about what's happening at the ECB meeting. Okay? I know I sound like I'm preaching, and I am, but I love you, babe. I want you to succeed. Okay? You can get some other kid on YouTube to help you scalp the PMI numbers and make your 40 pips and get rich and buy a Lambo and get girls in bikinis to fall in love with you. But that's not the message I'm preaching. Yeah. Cool. By the way, I had an idea. And I don't think anybody responded, so I'll ask again. And maybe I need to send out an email. Maybe these YouTube videos are not the right thing. How many people would pay $200 a month to watch me turn 50 grand into $1 million with a live account in the stock market? With conservative trading and being hedged. So if you'd have to be a member of Investor Boot Camp, so it'd be on top of all of that. But here's the thing. Okay? The thing is, I wouldn't just do it. I would discuss it with you, and you would help me manage it. We would manage it together. And we would have conversations about it. I was even thinking, okay? No, well, Sky Killer, I said you'd get all of that. So it'd be like, so let's say, you were already doing all that. So that was my idea. It'd be like, if I did it that way, $500 a month would include QuantBox. It would include the swing trading group. It would include the day trading group. It would include Investor Boot Camp annual membership, that kind of stuff. Yeah. So Roger, I would take it so far where I think we should meet in person a couple of times a year and do the other ones online. So maybe we do 4 meetings a year as a group, 2 of them together. But here's the thing. I would like to discuss the market conditions in that moment so we meet quarterly. And I say, okay, look, here's the situation. What do you think is going to happen the next 3 months? How should I rebalance or reposition? I might have to rebalance the portfolio. I might have to reposition. I might need to move money here, or I might have more money here and less money there, or no money on that investment. Okay? And I mean, they're real, right? There's real concern. So right now I'm in 7 different strategies. One of them is earning 20% income. I think it's 19%? 19% annual income, that one strategy. Now, for example, you might say, oh God, I mean, that's not like the asset going up. That's income. That's like rent. I'm not talking about the value of I'm not talking about the value of the apartment building is up 20%. I mean, I've collected 20% a profit from the renters put into my pocket. So I might ask you if imagine a stock is paying you 20% dividend or something. Like, it's insanity. It's not actually a dividend, it's income. But the thing is, Sky Killer says, I'd buy that. Well, that's too simplistic. But we could talk about it and say, okay, it's performing well. Why? Because premiums are high. Why are they high? And of course, what investment, what asset class? So should I put more money into that this quarter because it's performed well last quarter? Well, that's not the smart way of making a decision. The smart way of making the decision is, okay, it performed well. Maybe we expected it. Maybe we didn't expect it. Maybe high premiums is a good sign and we're being rewarded, but maybe it's a sign of risk in the near future and something is out of whack and we should pay attention to that. So we would be more discussing, okay, here's all the assets and they have all been performing, some performing great and some as expected, maybe some are underperforming. But more the bigger question is, what do we think is going to happen in the next 3 months? That's why I think we would meet quarterly. And we would talk about it as a group. Well, what do you think? Why do you think that? Here's what I see. This is why do you think? And from that, we could then look at the portfolio and rebalance it or take things out and add new things in. So if I thought volatility has been going up, there are strategies that I would not want to be in. But if volatility went up and then I thought volatility would come back normal, there's strategies I would want to deploy. So we'd have to talk about that and say, okay, well, VIX went up to 28. Whoa, why did it go up to 28? Oh, it was this, that, and the other thing. Okay, have those things played out? Will things normalize? Have those risks diminished? And if so, do we expect over the next 3 months for VIX to fall back to 14 from 28? If so, let's take money out of this, and this that we expect to underperform, cut this third thing way out, take all that money, and then put it into this new strategy. Okay? So Sky Killer, yes, that's what I would do. It's the same thing. Whether you're spending 300 now, it's 500, or you're spending 300 and then add 200, but yes. Okay? But the thing is, I would not accept more than 30 people. Because this is my real, what I would do is in my corporate retirement account, I would take 50 grand out of, right, and move it over, and we'd start a new retirement account. And I'll show you the game, how it works in America. So if you're not an American, then you would still learn portfolio construction and management and all that kind of stuff. And in particular, this is a high income derivative stuff, but I'm also trying to cut the tops and bottoms off the swings. So it's somewhat complicated, but you'll be able to understand. And, it'll probably take me 8 years to turn 50 grand into $1 million. So it'll take some time, but we can do that together. Now, if you are American, and you plan on being a professional investor, whether you're a hedge fund manager, you're managed program, you're some sort of professional, right? Forex trader, stock investor, whatever. I'll show you the game, because the real thing, the real world, and you're not going to get this from too many other YouTubers because they've never been licensed and registered. They probably don't have any education. They probably have never formed an actual trading entity. They've never been regulated, right? So how do hedge funds really make money? Okay, big money. And you might think, well, I'll trade $10 million and I'm going to make a lot of money as a hedge fund manager, and I'm going to get filthy stinking rich, and I'm going to have a $200 million yacht and all this kind of stuff. And you're like, whoa, dude, you might make a couple $100 grand. And that doesn't get you much in America. It'll get you to the next level if you don't have much now. But you're not going to be driving around in a Lamborghini if you're making $200,000 a year. I mean, you're not even in the top 1%. I mean, in lots of parts of America, you're actually poor making $200,000. So how do you get filthy stinking rich if you only make $200,000 or $300,000? How do you retire with millions? And this is the game, guys. The game is being able to invest into your own fund or invest money like a fund, like the way I would teach you. So what you do is your trading account becomes which is great, right? Like the money you earn from managing other people's money isn't the money that's going to make you filthy stinking rich. And I think a lot of people that don't understand how it works are really focused on that. Like, if I had $1 billion under management, then I'd be rich. Well, that's probably true, but the logic is kind of a little bit backwards. What you should be focused on is, what are you going to do with the money that you're not using to live with? Right? And that would be growing your account. Your account you're not spending. Like, let's say it's your Forex account. What if you produced 2% a month every month on average? So it's an average. It's not every month, but you average 2% a month as a currency trader, and you never had to spend the money. You never touched it. That's how you're going to get, if you want to have a fancy car, that's what's going to get you your fancy car. You understand? That's what's going to get your fancy car, if that's your goal. Now, it's not a smart goal, but imagine the compounding. So 2% a month is not 24% a year. It's over 30% a year. It's like 30, let's say 33. So every 3 years you double your money. Are you shitting me? That's ridiculous growth. So in 3 years, your 100,000 is 200,000. Another 3 years, your 200,000 is 400,000. And in another 3 years, so like, dude, in less than 10 years, you have $1 million in cash and you're growing at 33% a year. I mean, it's insanity. Meanwhile, you're just earning a little bit from managing other people's money, and you're providing them a good service. You're no different than a plumber. People pay you money to manage their money. They're like, I don't know anything about plumbing and my pipes are leaking. Oh, well, ma'am, I'll take care of it. I don't know anything about money, but I want to retire rich. Okay, cool. I'll manage your money. But it's no way to get rich. If you're bad with your money, how the hell would you be good with other people's money? So what happens is you live on the 200,000 or whatever, 300,000 you're making on your little managed, your little hedge fund. And you got to look at it that like you're not trying to get big, you're trying to manage people's money for them. But on the flip side, there's this Forex account that you're growing at 2% a month. Okay? Okay? You see? So anyways, that's that. But in America, one of the great things about America is they've set up programs for retirement. So if you have a filthy, stinking day job, okay, then you have a 401k, which is great. And then, again, if you're an average worker, after that, you can open a Roth or a traditional, IRA. But you're maxed at $500 a month. Okay? You're like, $500 a month? You imagine? That's it? You're saving for retirement, and let's say you're a professional and you make $250,000 a year, and you're like, well, after your 401k, you can stuff away $500 a month. You're like, dude, that's hardly anything. You're supposed to be saving a lot more than that. But in America, if you own your own business and you're a small guy, see, if you had 5 or 6 employees, you should open up a 401k for your employees and contribute to it like a real company, right? But what if you're just a single person company? What if you were a professional Forex trader? You see where I'm getting at? And you manage other people's money. You have your own account, but you also manage other people's money. You're not making millions. But combined, you have this money over here, and you have income from this service that you're providing there. And total, let's say you're making $300,000 a year. So you're doing okay. That's not amazing levels of money, but it's not poor either, right? America set it up because you're so wise being a small company that they have a program that can allow you to put thousands of dollars aside a month. And that's how you get filthy stinking rich, or at least retire with millions. And so I could just show you, if you lived in the United States and you were a small fund manager, like you were managing some Forex accounts, and you're doing okay, I'll show you how to play the game. And that's like the stuff you don't even get at Harvard. But it's one amazing benefit of being in this economy. Now, if you're like, but I'm not American, Wayne, okay, great. Well, don't worry about that aspect. Worry about everything else. Saving money for the long term and investing it with low volatility and high income, and enjoy the compounding of the income over long periods of time. And then when you're too old to work, or you just don't want to work anymore, you'll have a huge net worth of assets that provide income. Imagine having 500 apartments or 500 houses without having to manage them, What would you like? 500 houses? Or let's say that's too crazy. How about like, would you like to have 5 houses with renters in them? Or have exactly the same income and then exactly the same net worth of assets, but with none of the headaches of renters and of landscapers and replacing roofs and cracking driveways and broken windows. I have a friend, he owns 7 houses and one of them burned down, and you're always doing background checks on new potential renters. And you're like, it sounds great to own 7 houses, but it's actually, I think, a terrible way to make money. You just can't scale it. Can you go from 5 houses to 50? Not a regular person. All of a sudden that becomes a company, and you have to have employees and all that, and it gets complicated. So how can you just scale? So that's what I would teach in a program like that. And I thought, so like we're going to meet up in Austin pretty soon, which I guess I have to set that up. But in about 8 weeks, we're going to meet in Austin. And I thought, well, cool. If I had a mastermind group, maybe we'd meet a day early. Okay. When would you be able to do it? I would do it soon. I'd rather like to do it soon, but it's one of these things like, if it's 5 people, I'm not interested. I don't have time. But if it's 25 to 30 people, like a mastermind type group, I would limit it to that. Because then I'm like, okay, I'll open up the books. I'll even have my books audited once a year, so I'm not bullshitting you, that kind of stuff. But it's a pretty, right? It's I think a pretty interesting thought. Yeah, that's what I thought, Sky Killer. Yeah, I'd like it to be a little bit more than that, but that would be maybe okay. Okay, but anyways, so I've talked too much on that, so we'll leave that. Boo, 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 boo. Okay, so anyways, that's the thought. Yeah, Sky Killer, I got you, right? Yeah. So, yeah. I'd rather do it like a mastermind group, like one price for everything, not like piecemeal. Okay. No, but again, Sky Killer, I don't want a lot of people. And the second thing is, if you're already paying $200 a month for the day trading group, and you're already spending, $80 on QuantBox, then it's really, if you got all of that included, then it ends up only being $200. So anyways. Oh, thank you. Thank you. Yes, I'm back from Florida, from the FL. Yeah, Florida was great. It was very, very, very hot. The United States is in a heat wave. It was very, very hot. But my favorite part was going on an eco boat tour. So we went out, and what they do is they catch I don't know, like squid. So I pet a squid. Yeah, calamari. He didn't like it. He inked. But it was really cool to see squid, and be able to hold one, and flounder. What an amazing creature. I know what a flounder is. It's not the thing from Little Mermaid, by the way. So I know what a flounder is, but to hold one in your hand is amazing, you know, and to look at it in the eyeballs and you're like, I don't know, what a shifty bastard. Well, because flounder is the one that lays flat underground, so it has two eyes on one side of its face, you know, and you're like, whoa, you're looking at it in the eyeballs, right? So anyways, that kind of stuff. And you're spending this time with your kids and stuff. You know, my kids are not babies, but we still really enjoyed it. That kind of stuff. Like just, right? Very, 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 very neat stuff. So anyways, yeah, it was nice to be released into my natural habitat. But now I'm back in the world. Back in the grind. So anyways, if you're risk on, that's what you're going to be looking for. Right now, we're still riding the 21 on the kitty cat. Okay, that's still risk on. Still risk on. What was I going to do? I can just go back to this. Okay. Let's take a look at some commodities. Oh, that's not it. Currencies, commodities. Cool. My WTI doing really nice. Remember our trade plan? We're targeting 80. Once again, we created this trade plan as oil was falling, not as it was going up. Okay. Did it come back all the way to 72.50 and make a perfect entry? No, it did not. Did it kick off the buy zone? Yes, it did. And this buy zone is plan A. This one was plan B. Plan A has worked. We're riding the moving averages. Targets right now, 80 bucks. Nice and easy, steady Freddy. Nothing complicated. Simply a higher high after consolidation, higher low, gone. Okay, nice. Nice, but inflationary. Bitcoin's struggling. Okay. Bitcoin is struggling. So what should you do? Well, if you're a bear and you're interested in risk off, this is the play. 27,000 is your target. If you want to be a bull, you have not market conditions favorable for that. So you would need to wait. You may not get a bullish move this week unless there's a radical move. And Bitcoin obviously can have a radical move. In particular, maybe around the Fed meeting. For example, the Fed says they're done. They changed their mind. On Bloomberg this morning, on Bloomberg Radio, because I listen to the radio in the shower. I know. Hey, don't judge me. And they had a fund manager, a big bank, a market strategist. And she said the Fed's going to raise interest rates this week and then stop. So I understand the logic of that. I understand some of the economic data that she has based her strategy on. Right, or Peter says, or a settlement, SEC on Ripple. Yeah. But my comment on the strategist is she's got an opinion going. And I suppose maybe that's her job as a strategist. But I'm a strategist too. And my opinion is based on what the Fed has told me, not what I'm guessing, not my interpretation. The Fed has told me 2 more rate hikes. So what are you thinking? July and November. Okay? And central banks have done this for a very long time. It's an old trick. The Reserve Bank of Australia loves this trick too. It's raise, pause, raise, pause, raise, pause. The Fed has already told us too. I've already plotted it out. Cool. So until the Fed tells me otherwise, I'm just going to deal with treat that as a fact. Have I looked at Kiwi CAD? No. Once again, I'm not a big cross person, but we can do that, I suppose. I'm not terribly bullish on either of those. Either. But because I don't look, maybe I don't know. Okay. I would let me defer to QuantBox. Let me pull up a cross pair just so I have some research. Kiwi CAD. I don't know anything about Kiwi CAD. All right, let's go. Okay, slightly bullish. Slightly bullish, but not really interesting until August, September. But definitely, well, neutral, institutions are neutral. It's like 50-50 basically institutionally, and 80% long on retail. So that it's bullish, but that doesn't make me very excited. How are we doing on risk for today? Still neutral. It doesn't look great. It doesn't look great. Kiwi CAD. It looks mixed. All right, so I guess I don't even know where I would make a Kiwi CAD. I guess I'd go to this CAD. Kiwi CAD. Oh, there's a Kiwi CAD. All right. Look at the volatility on that, huh? Buy zone, target zone, complete 100% collapse. I don't like this. I don't like this at all, really. Let me measure it best I can. We're on the mean. Oh, from annual to daily? Yeah, maybe. I don't start that way though, right? I don't start technically. I start fundamentally. I mean, what would I do here? Like, I look at this as a synthetic trade is the other thing going on in my brain. Like, really? Does New Zealand really do a lot of business with Canada? No, probably not, huh? Like, in reality, we're not even observing a real trade. But let's see. If I were to be a bull, this is an okay place, price-wise. And then if, what would I be looking for? So the bullish trade plan would be this way. And then we've done a bottom. Okay. And then we've done a rally. but then we didn't break out. So now we're in this zone for now. And I'd rather, I know these are too big, but well, at least you can see them. I'd rather wait for the break. I'm not compelled. I'm not thrilled with New Zealand. So, for example, in my 2024 outlook for New Zealand cuts the fastest. If central banks are cutting, New Zealand's going to go first, and they're going to go aggressively. And then if I look at CAD, they're not far off of that. So I'm like, I don't know. I'm struggling with it. That's all. Okay. Am I bullish or bearish on the dollar? FX, what time frame are you talking about? The next 2 hours or the next 2 years or the next 20 years? Okay. I'll try to answer the question for you. Oh, okay. Well, the way to answer that is I would say seasonally, the next let's say 90 days favors the dollar. And then seasonally, I would sell. So the way I'm looking at it is normally we fade risk on and then pile back in later to end the year. The risk this year is that we go into recession. Now, I think that's actually fairly low risk, but I know what to watch because, like, the opinion to me is irrelevant. We'll see when we get more seasonally focused, which is not now. This is a fade time. So when we get closer to the September Fed meeting, we'll look at economic data, which I don't expect to radically change. But if it did radically change, then I would have to change my year-end outlook, okay, FX? So, like, I'm actually trying to make sense. I don't know if I'm not making sense. But you have to understand, my bias on the dollar has very specific rationale. So if you're bullish on the US dollar, it's because you're risk off. So I'm leaning toward risk off now, even though we're in a very, very bullish market. Well, look at some of these moves. Like on this is Kiwi. We know Kiwi, right, is the least bullish of them all. And I already have an X and everything showing you the down move. And this is risk off. That's risk off. And that is what seasonally makes sense. Okay? So that makes sense. Now, some other assets are not that bearish yet. It's because they were much more bullish. Kiwi was never supposed to be bullish. It was just the USD was so weak because everyone was so long NASDAQ. Okay. Now, 90 days from now, the seasonality changes. So I have to then compare long-term seasonality, and I mean 20-year trends, with what is now. But that now isn't for 90 days. But then I look at that and I can interpret the now. And I'm going to break it down into increase in risk of recession or a decrease in risk. Okay? So if there's an increase in risk, I'll probably stay somewhat bullish on dollar. If there's a decrease in risk in that period, I'll sell the dollar. Okay? And I have a feeling, right, which is now, I say feeling because I think it's foolish for me to guess. I can project and then interpret and then guess that we will either not have a recession this year or we enter into a very shallow one. And therefore, I don't have to be so dollar bullish. Okay? Right. So now if FX says, hey, well, I'm bearish on the dollar because the market has fully priced in one hike and a pause. Right. But they have told us two. And that's the point. You see, FX? So I was talking about a banker, a strategist for a big bank, and she said one and done. Okay, that is an interpretation, her interpretation of her research into a guess. And she might be right. And that is what's being priced in. But I also know from experience, just because it's priced in doesn't mean it's right. And what I would do, FX, is say one is priced in, but the other one the Fed said they would do. Now that's fact. Is not priced in, and that leaves room for dollar strength. So it depends on how the data comes out. And it will be different if in September the Fed changes their mind. Then I too will change my mind. But I've learned as a survival strategy. My job isn't to guess what the Fed's going to do. My job isn't to think, if I was running the Fed, what would I do? I've learned, good or bad, right or wrong, pretty or ugly. I got to this point, and here I am, and I'm going to explain it clearly. Whatever the Fed has told me, that is the fact. And if I get screwed over, I get to blame the Fed. The Fed lied to me. Well, that's a good out. But I am not going to guess and interpret, right? Now, are we likely to have a deep recession? If you look at the economic data, no. But is the risk there of a deep recession? Yes. So I think I talked for about an hour and a half to 2 hours when I did the third quarter outlook. And I went over in great detail with furious anger the data, much of which is benign. Some is concerning, but there are a few things that are alarming. So there could just suddenly be a dramatic change. And I need to be aware of what would create the dramatic change and how to interpret that into a trade so I make money. And that was the whole point of the presentation. So it doesn't look like the sky is falling, and it probably won't. But when I see the meteor in the sky, it's either Superman coming to Earth to save humanity from evil, or we're all going to die. But I will be able to get one more trade in. So anyways, be ready, willing, and able, but know what to look at. I guess this is how to summarize today's live stream. Know what to look at. Know what to pay attention to. And filter everything else out. So is PMI good economic data? Yes. Should I care about it? Well, it created volatility today. So FX says, hey, but Mr. Wayne, What data might really trigger a recession? I covered that last week, Tuesday at 10:30 in the morning. People paid $10. Okay. So it's at investorbootcamp.com. There you go, yo. So there are people that are well informed. They know that. They know that for sure. So anywho, hey, that was real. Would you, if I said anything a little bit intelligent, would you click the thumbs up button? Okay. And by the way, one of the things I'm focusing on this week, yeah, I didn't do the poll. I know it's there. I apologize. One of the things I'm doing this week is I'm releasing my AI. That's the plan. I now have developed artificial intelligence called Aiden. And I can ask him, well, actually, I can share him my trading idea on almost any currency pair. I could even reverse the currency pair. Instead of doing pound dollar, dollar pound. Why? Or how about, like, you wouldn't do that for pound dollar, but you might get, you're like, man, it's so hard to do USD CAD. Why can't it be CAD USD like Euro USD and pound USD? Well, you can tell Aiden, he doesn't care. He's so smart, he can inverse it and it won't challenge him at all. So you could say, I have a trade plan on the pound CAD. I want to buy here. I want to put a stop there. I want to put a target here. And this is my chart. What do you think? And in less than 3 seconds, 3 seconds, you'll have an email with 3 different trade plans on your CAD dollar. Now you're like, Wayne, how can you generate a CAD dollar chart so quickly? What are you like? Did you license TradingView or something? No, there's no charting package. Now we will send you 3 charts. We have every candlestick data going back a lot. Enough. And we just with the candlestick data generate our own chart, kind of like an Excel spreadsheet. I mean, really, it's a table of price and time. So we could just generate this stuff. So we could do things like calculate moving averages and standard deviation and linear regressions and stuff like that. We do all the calculations in the background. Generate charts on 3 different time frames. And trade plans, based on what you told us, Aiden might agree with you, Aiden might disagree with you. And then generate the chart so you can see how the artificial intelligence analyzes the trend on those different time frames. And the buy zone that the AI would consider the right buy zone, even if you're a bear, we'll just say, compare this to what you're doing. And target levels. Okay? Okay? Now, Richard says, isn't that algo trading? Very much so, but it's all designed now, Richard, with machine learning. So as it does its thing, so let's summarize this. You post a trade plan, 3 seconds later, you'll get 3 trades that I would probably agree with as a way to compare and contrast with what you did. 3 different time frames. And I'm telling you, I'll look at these trades, I'm like, yep, that's what I would do if I were me, because I taught it. But here's the thing. So Richard's like, well, you could do all that with algo. Well, yeah, but that's how you train the machine. How do you analyze what a trend is? How do you analyze what a buy zone is? And you give it rules and stuff. And that's what algorithms are, right? You give it math. So literally we had to teach it y equals mx plus b. And then calculate the variance. Well, actually you do y equals mx plus b. Calculate the mean, calculate the slope of the mean, calculate the variance from the mean, take the square root of the variance of the mean to get standard deviation. Like, you have to do all that math. If you don't understand the math, you ain't there. Okay? So anyway, so that is algo though. But the thing is, all of this is sitting on the Amazon cloud with machine learning built into it. So it knows how I would trade if I were me. It would be able to do this on anything at any time frame instantly for you to get feedback. But then it's going to learn from what you did, what you said you wanted to do, and it'll learn from what basically I said it should tell you. And it will then analyze and learn as we go through history doing this. So you will get feedback that I'm almost certainly would give you if I were me. Okay? Because I look at it, I'm like, yep, that makes sense. Of course it makes sense. I taught it how to trade. But imagine to get my thoughts in less than 3 seconds any time of the day on any asset class in less than 3 seconds on 3 different time frames. If you want to invert and reverse everything, doesn't matter. We can do it. It's really, really nuts. But as you're getting feedback, it's learning. Now, how does it learn? We track your trade plan. And we track our trade plan over time. So the trade plan you implement, we might, and this is Aiden. Aiden would have to watch for hours and days and maybe weeks. And learning if you were right or if I was right. And then learning and adjusting and improving. So pretty soon, it won't just be giving you what Wayne would do. It would back it up more like, okay, Wayne taught the AI, Aiden in this case, I taught Aiden how to trade. Over time, just like you, Aiden will improve and become independent of me. Oh my God. So this isn't just, you insert a trade plan and we spit out some technical analysis. That's the easiest part. It's going to track over time. So we're going to watch tens of thousands of trades at a time. And Aiden is learning from all of them. FX is like, yeah, how does he see, learn, and watch? Boom. Well, that's what machine learning and AI is all about. And we looked at multiple things, and I thought we were going to use some vision stuff, and we're not going to use much vision stuff, but like developing essentially a neural network, yes. So ML, neuro, and yes, the answer to that is yes. That's what's happening. Whoa. And right now, over the weekend, I asked it to do some analysis for me, and it gave me 3 trade plans that I would do. Even if I wasn't looking at that pair. I think I threw in Aussie Swissy, just because it was near the top of the list. And it did 3 trades that looked right to me. 3 trade plans. And all of this is in seconds. So I'm about to launch that because here's the thing. My time is valuable, but I want to give you feedback. I want to help you learn how to trade. But I can't be here 24 hours a day, right? And my time is limited, so I do live streams, and then I do, group work and all that kind of stuff. And some people hire me at $500 an hour. and I don't have many hours, so it's not a big financial thing for me. It's just my time. So I'm taking resources, which is my time and my money. These are limited resources in my world. I'm like, what if I invest my time and money so that I can give you more support? What if I could be available to you 24 hours a day, 7 days a week? And you're like, Wayne, what do you think of this? 3 seconds later, I give you 3 different time frames of that analysis. Some of it may agree with you, some may disagree with you. I'm like, oh, that would be helpful. And I hope you agree too. So it might be ready for some beta testing this week. That is the plan. That is the plan this week. Okay, I got to do a couple of things and I have to meet with the developers and all that kind of stuff. But I know the AI side works. The things that are not working are little things like you register your account on AWS, which is the Amazon cloud, and then it gives you an XML error. And for some reason, you're like, what? Oh, well, it's not taking you to the dashboard properly. So we got to figure out, like, why is AWS giving us an XML error? It's silly, ridiculous stuff that has to be addressed. I didn't like the way the form worked, so I want the form to be updated. But right? Okay. Okay. Well, so, right, Javi says, hey, Wayne, if you want to scale up, I should hire people. Okay, so I'll double prices. You see where it gets, like, I struggle to get people to pay $88 a year for 100 hours of hardcore education. So I'm trying to keep, Javi, because I'm trying to help people, I'm trying to keep everything as low key as possible. I'm not trying to create an education empire. Okay? Okay? So anyways, but if I can, because like my plan right now for Project Aiden is it's free or nearly free. So I'll invest thousands and thousands and thousands of dollars up front and hundreds of hours of my time to develop an automated system for basically Ask Wayne. Instead of asking me, ask Aiden. See, he's aiding traders. So ask Aiden. And if it gives you feedback before you trade and you look at it and you can compare and contrast, then I'm fulfilling the mission, my mission, but like the mission of the organization. I want to help you learn how to trade better. I want you to become an independently thinking trader. I don't want you to make 1,000 mistakes before you pick up 1 ounce of positive learning experience. I'm trying to help you. FX, I'm telling you, like free. That's what I'm thinking. Or nearly free. And if you can learn, then I achieve my mission. So it'll be free or nearly free. But I have many thousands of dollars already into it. It's going to cost me many thousands of dollars a year just to host it and give it to you. And the more you use it, the more it costs me money. So I might have to monetize it somehow, but the general idea is it's free. I haven't hooked up a payment system to it. So right now it's free. And I hope stuff like this makes it self-evident that maybe I am different. I want to help. And I'm willing to put my money where my mouth is. I'm not trying to make $1 million on YouTube streams. I'm contributing. I want to be a contributor to your success. So with that being in mind, peace on earth, may the pips be with you, may our profits be above average. Thank you for contributing to this community. I appreciate you and everything that you do. I like our relationship. Cheers.